In looking at the companies that you work with, would you say most financial planning at a company basis is reactive rather than strategic?
Extremely reactive. Usually it's, I'm paying too much in taxes and they react. Not preventative, not strategic, it's always reactive. Or I hired 30 employees, now what do I do? Or I got a letter in the mail that says now I'm required to offer health insurance because I have more than 50. Where do I find this insurance? So then what do they do?
Would you say that if your exit plan started 5 years before retirement, is that too late?
Yeah, I think 5 years, you have plenty of time. I would start sooner if I could, but I think 5-year plan, if you have what works today, also could help you at your exit, even if it's 20 years from today. If it works today, tomorrow, and at exit. So today's the best time to start today, because you don't know when 5 years is.
That's true. You could think I'm going to sell in 5 years, but it could take you 7.
It could take longer, or somebody may come along tomorrow.
Hello, friends. Most entrepreneurs think revenue equals wealth. It doesn't. Most business owners think that they'll be able to sell their company one day. Most won't. Today's guest has built a financial planning model designed to fix what he believes is one of the biggest blind spots in entrepreneurship: lack of structure. Brent White is the founder of Dallas-based Boss Financial Group, creator of the Financial Foursquare model, and author of the $1 Million Playbook. He helps business owners understand how cash flow, reserves, debt, tax, strategy, and exit planning all work together or fall apart. In this episode, we'll talk about why so many 7-figure businesses are still financially fragile, why most owners are building jobs instead of enterprise value, and how to create a business that can actually survive, sell, and someday sell. And if you're new here, I'm Joseph J. Raitzer, a former Wall Street lawyer with more than 20 years of experience across $100 billion in transactions. I'm also a former entrepreneur, having launched 2 businesses. One, I built and had a 7-figure exit in less than 3 years. I rolled that into a national retail chain and lost it all during the pandemic, but I've rebuilt back. I've generated tens of millions of dollars in both B2B and B2C sales. I've hit highs, had lows, and rebuilt from scratch. My law firm, Raitzer PLLC, focuses on mergers and acquisitions, buying and selling companies and assets, as well as securities laws to raise capital. I'm licensed in both New York and Texas. My podcast, Wall Street to Y'all Street, is where we bring you real business lessons from seasoned operators, founders, and executives who've actually lived and breathed businesses' ups and downs. I'm not giving legal advice here. Always consult with your attorney regarding your situation. Enjoy the show.
I'm here today at Boss Financial Group headquarters with founder Brent White. Brent, thank you for your time today. Welcome.
Thank you for having me.
So before we get into what you're doing now with Boss Financial Group, where you were before you founded this company, talk to us, if you will, a little bit about your upbringing and how you feel that contributed to you becoming an entrepreneur.
Grew up in a small East Texas town. Nobody I knew really owned businesses. Everybody worked at a factory. Even my dad was in the oil field industry. That was, you go to work, you get a job, you get a pension, you retire. There was not a lot of entrepreneurship around. I always had that spirit in me. I always wanted, saw TV, and I wanted to own my own company and own my own business. Ended up going to college, and I was a basketball athlete, if you can believe that, at 6 foot tall in high school. So I ended up going into college with that, and I thought I was going to play pro sports one day, and then it all falls apart, and then you got to get a job. Back in the day, you flip through the newspaper, and that's where you find jobs opportunities. One called Mutual of Omaha was in the back. I'm going to call these guys. And of course, you go in an interview, and they hire everybody. Started off in employee benefits, and back then health insurance was a big deal. All the health insurance companies that were around. And so my career did this and then that immediately. And I was like, what am I going to do now? And then so over time, I started a few businesses, learned the hard way, a construction company, and did some stuff in the oil field, School of Hard Knocks, trying to learn how people take advantage of you if you don't know what you're doing, and structure things the right way today and how that's going to help you later. Doing things right, everybody thinks it's more expensive. It's actually cheaper. But that's lessons you have to learn the hard way. So I think when I met my wife, Suzanne, she's in the commercial property and casualty space. I was like, man, I want to get back into this financial planning deal, because I took a little break and started building software. And that's how we were able to build the Financial Foursquare and all those things. But
so just, we're fast forwarding on that front, but just so I understand, I didn't hear any coding jobs or software development jobs.
No, I did it on my own. Just jumped out and we built a product, YouTube, get on there and learn how to do something. And a partner of mine, which he was a really good coder, we invented a couple of different products that we tried to use in the automotive industry, and they were super successful. Then we sold that product off, and I had to find a job, right? So then I found something to do, and financial planning was really my passion, and that's how we got back into what we're doing today. But then we decided that we really want to focus on the business owner space, because I thought we had a unique perspective on what it is we're doing. Worked with one of the largest CPA firms in the country for about 4 years in their insurance and back office, and I thought there was going to be these secrets that, man, I'm going to get in here. I'm going to learn some things that I really didn't know existed. This is probably as vanilla as it gets when you get there, right?
When you say that, meaning it's pretty basic advice, that like fundamentals that just
so basic stuff that you think there's going to be some magic. And there's a few things that they did that were out of the box, but for the most part, it's here's your information. They do a tax return. They lay out a menu and say, pick one of these services that you would like to have, a property and casualty review or a 401k review. Well, what we find out is clients really don't know what they want. They don't really know what they need. I have a 401k plan. Was it any good? Have you benchmarked it? Has anybody looked at this stuff to see that you're not overpaying in fees, or that the funds that you're offering to your employees are even up to date? Are you in compliance? They have no idea. And really, there's nothing out there explaining to business owners where to find this information. Where do they go to even look? What we realize is we're all guilty of it. We start a company the same way. I buy a truck or a bulldozer. I put it to work. When I make $10,000 a month. The bulldozer costs me $5,000. I clear $5,000. So what do? I'm gonna hire this guy to sit on this bulldozer for $4,000, and I'm gonna buy another bulldozer. And then every company starts exactly the same way. It's very siloed. This money is here. This money's here. And then I have to buy insurance. Then I gotta pay this guy's benefits. And as long as he's working and it's making money, we're profitable.
And that may work for the first 5 bulldozers or something, but when you start scaling, it breaks quickly.
And we see people have major success with it too, because there's such a margin. And they're like, I'm doing incredibly well. Look at my numbers. You're 10 years away from filing bankruptcy, and they don't realize that.
Yeah.
I think the stat is 80% fail within 10 years. And then after 10 years, 80% fail within 10 years. It doesn't change the number. It just compounds the problem. Yeah. We actually dealt with a client a few days ago that filed bankruptcy on this company on $17 million worth of debt. And they thought they were doing unbelievable. Then one day they can't pay the bills.
It just creeps up on you pretty quickly. But
it happens.
Using the kind of software that you've developed in your experience and seeing all of the businesses, and from an advisory perspective, you can look at them and say, hey, look, this is where you're headed.
This is where you're going. If you don't fix these problems, this is what could happen. And we know as a business owner, it's not a straight line to growth. It's pitfalls. And I didn't see that, oh man, that's a major setback. A COVID hit. I'm a restaurant. Nobody come in my doors anymore. I didn't see that coming. That's a setback. How do you prevent as many setbacks as possible to try to reach that end goal?
So would you say the majority of business owners aren't building wealth, they're just building a job?
Yeah, they're building something to do every day.
Yeah.
Building income, maybe income. I got a stream of income. It's really good. My family lives great off of this. It can go away just like this.
Can go away if the environment changes, and it can also just go away if you're debilitated. You have a hospital run and you can't leave it for 30 days, or you leave for 30 days and it all falls apart.
I think the technology changing is one we see a lot. And one day, like we just had a conversation about tech developers and this AI scary stuff. Here's guys that are charging, we actually got a quote on some software development a week ago, was $250,000 for the next round of development. And I think I just did it in 30 minutes in my office before this podcast.
It's amazing.
Yeah, and that's scary because here's this guy, not going to hire him, he's out. That's a big deal. That's a huge swing in income now going for me to keep it versus this guy getting to take my money that I really need him to do it. Now I can do it myself.
And so you do have a bit of background in coding because you're self-taught, but really it comes down to the prompts. It makes it so much easier. You've gotten to a point where if you prompt AI to code something,
I can tell it what to do, it'll do it.
Wow.
But people don't know what to tell it to do. I think that's where we have a huge advantage.
It's also still early days, but it's coming. You see it.
Sure, it's here. I've never seen an AI program to work out the way I wanted it to until this one. And this one, I'll go find it. But man, it is crazy what it can do. Now I can do everything I was wanting to do instead of having to pay a lot of money. Now I can just get it done.
It's also straight to the bottom line, that 6 figures we're going to pay out for software.
I'd rather keep that money.
Yeah.
The other cool thing that we see is Nokia is a great example. I see you have a cell phone. I have a cell phone. It doesn't say Nokia on it. At one point, 90% of them said Nokia.
I remember that.
So the widget changed, right? Or somebody came up with a better mousetrap. And just because we're on top of it today doesn't mean we're going to be on top tomorrow. So we got to be ready, right? We always got to be prepared.
Would you say in looking at the companies that you work with and the advisors you work with, would you say most financial planning at a company basis is reactive rather than strategic?
Extremely reactive. Usually it's, I'm paying too much in taxes and they react. Not preventative, not strategic, it's always reactive. Or I hired 30 employees, now what do I do? Or I got a letter in the mail that says now I'm required to offer health insurance because I have more than 50. Where do I find this insurance? So then what do? Google. Or they ask a buddy who handles your insurance for your company. John down the street. How do you know John's any good?
And so how do you advise companies? How do you prevent against that? I think obviously there's some self-selection process in that a company hiring someone like you
Yeah.
recognizes they have a problem.
Sure.
Maybe that helps. But I guess generally, how do you prevent against that reactive nature? Because that is, we tend to react to pain.
So if I'm going to run a company and I'm going to offer employee benefits, I need to do some research on it way before I ever offer employee benefits. That way, when somebody comes in and they're saying you need to offer this health insurance and these voluntary, how does it affect the business financially? Does it really have retention? Am I using the best products out there? Am I working with the best firms out there? I think doing that research, not just taking a referral and say my buddy does my insurance. Okay, let's use him. He's a good guy. You play golf with him, right? He's a nice guy. Let's do a little research, find out what do I really need to offer my employees? What's required by law, but what's the right thing? Same thing on property and casualty insurance. The people that do my home and auto probably aren't the people I need insuring my business. My retirement plans, the guy who manages my personal wealth may not be the right person for my 401k plans and things like that. And so it just goes on and on. Doing that research and learning something about it, so when somebody speaks to you, you got to have some knowledge on these things.
That financial literacy, that's important. Going back to what you were referring to or talking about earlier about the statistics of small business failure, just generally, and I think it's 82% of small businesses fail within that short period of time. What are the top couple of reasons you see that happen?
Obviously, we talk about this all the time. You ever seen a business plan? You ever seen one that says it's going to fail? They all say they're going to be successful. None of them say, year 3, this is going to tank. No, they all say they're going to be successful. Underestimating cost, I think, is a big one. Not really understanding what things are going to cost. Well, insurance, just put down $1,500. Just put something down there. It may not be $1,500. It might be $15,000. That's one of them. I think what it costs to hire someone, the hiring process and onboarding, I think people underestimate that. It is very expensive to hire employees. So the hiring, firing, high turnover is not something you want in your business. And then I think third is that corporate structure and paying too much in taxes. Not understanding tax laws and surrounding yourself with people that really understand it.
Yeah, it's amazing because a lot of people they don't want to spend the money it takes to get that proper tax planning advice.
It's cheaper to do it when you start.
And it's cheaper to do it, get it set up the right way, and that's some good ROI right there, right? It comes back to you. And then I think also with respect to the business plan, that's spot on. I think a lot of people will do it and then they'll just go running, and then 3, 5, 7 years later, the world's changed, but that snapshot in time is no longer applicable. And so even if they got that $15,000 premium correct, that's not what it is at this time.
It's going to change every year.
And then a lot of the clients that I deal with that are in that position, because I do have to refer some clients to bankruptcy counsel, when's the last time you raised prices? We haven't.
The cost went up.
Exactly.
Yeah. They were saying, let's just tax the rich people that own these companies. All it's going to do is drive the cost of the widget up, right? We're going to pay it. But in your business, you have to adjust. Two things got to happen. You got to drive costs down, or you got to drive prices up, or you go out of business, one of the two. Because that margin is what you make a living on. We focus not just on that gap, we focus on the whole picture. The cost of everything, what can we do to drive costs down? What can we do in that profit margin to reduce taxes or maybe make it a little bigger for you? And then we got to make it all work together. It's all got to be in sync.
So we had talked a couple of months ago when we first talked about how you came to come up with the Financial Foursquare model and Boss Financial. And I thought it was very interesting. I'd like if you can share that story.
Okay, well, we worked at a really big firm and they had all the departments. They had everything from your 401k teams to your personal wealth management. And they're really good at all these things, the property and casualty piece, the employee benefit piece, or group health insurance, all these different things. And a client would want a 401k plan. And the 401k guy would set them up and everything's great. And it's thanks for your business, see you later. There could have been an opportunity for all these other things, right? So we created that software in that model and said, look, we can put all this on one model now and work together in the betterment of the client to reduce more cost or put more money back into their pocket. And the place I was working said, we menu sell, we don't do that. Like, let the client pick. The client doesn't know. They may be really good at building that building, but they don't know employee benefits. They don't understand 401k plans or even deferred comp plans or key man insurance or their buy-sell agreement. We had a client 2 days ago said, read over this, I have a buy-sell agreement. And we read, it's just an operating agreement. It has nothing to do with the death of a partner or a disability of a partner or a divorce or a bankruptcy of a partner. What if your partner files personal bankruptcy? Could that affect your business? You could drag that into the actual business itself if it's not structured properly. So we want to make sure that all of it works together. So that's why we created the Financial Foursquare, was to solve those problems.
And so basically, if I recall correctly, you were at this large firm, you came up with this, hey, let's try this.
Yeah.
And they were like, stay in your lane, buddy.
That's exactly what they said, stay in your lane. And I looked at, and my wife worked at the same firm. I looked at her, so we can't work here. We got to go somewhere else. And she's, today? I got to go. We got to get out of here. We had that epiphany of look what we can do that's so much better. And we want to share this with as many people as we can share it with. And that's our mission now, is to teach other people how to do this stuff as well. As I told you, we have a conference tomorrow. I think there's 12 people coming to this one. The last one we had about 24. All 24 people wanted to join our firm. Like when they left here, they're like, yes, I want to do what you're doing.
And so give a bit more color as to that. Who are the people coming to the conference? How do they join the firm? Like, what is that exactly?
They're financial advisors, independent insurance agents from all over the country. Everybody kind of has a specialty. We put a team of people together. I can't do employee benefits, but I have somebody that does it at a really high level. I don't do property and casualty insurance. Like, you don't know their assets. You don't have a list of it. So they go off the old policies. The old policies are incorrect. Now they're just creating this snowball effect. We've asked around. I've never heard of anybody doing this before. We look at a balance sheet to make sure the property and casualty team is doing what they're supposed to be doing. And then we keep it all in the model and make sure they're actually, hey, you didn't insure these assets.
So it's like a holistic financial planning for businesses.
Yes, sir.
And then going back to exit planning, why do you think it is that, in my experience, most entrepreneurs wait until the last minute to figure out how they're going to exit?
That's it.
They'll wait until,
For sure.
and maybe they've been running the business for 10, 20 years, and then 6 months before they want to sell, they're like, okay, I'm ready, but without doing any groundwork.
I'm trying to think who it was. It wasn't Warren Buffett, but it was one of the guys that said, you need an exit plan before you start your business.
I love that.
You need to know how you're going to get out. And we don't call it exit plan. We call it escape plan. How are you going to escape this? You've done a great job. You're making a lot of money. How do you get out before this thing implodes? And then we call it escape plan, but nobody plans ahead. They always like, John wants to buy my business. What do I do? Should have thought about this before. So business valuation is one of the things that we do every single year with a client. Every year we do another business valuation, show them exactly where they are. If you sold today, what does that even look like? Is 10 million enough with 3 partners and you all had to split it up after taxes? You're going to be able to live off this? Let's measure it and see. And give you that environment of, no, this isn't enough, or we need to do something else to be able to make this better. How do we improve that valuation? How do we reduce some debt? How do we have another bucket of money in case, what if nobody wants your business?
So an annual assessment, and the owners know at any point in time, at least within the last 12 months, this is what my number is.
This is the number today. Yeah, I think I can get 20 million. Your business valuation came back at 10.
Push harder this year.
We got to sell more widgets, right? We got to work a little harder. We got to cut some costs. What if we get more efficient? What if we can create another bucket of money that maybe 10 million now is enough because we were able to reduce taxes and put money in your personal pocket, that now maybe 10 million is enough. So we got to look at everything, but you got to know every option. Maybe Junior doesn't want the business.
I'm seeing a lot of that. They're like, no, thank you, Mom and Dad. Well, sell it.
Great example. A friend of mine owns a very large financial services company. He's almost 70 years old, and his succession plan was his kids. His kids retired 2 years ago.
Oh, wow.
They're in their 50s. They're 50 years old. They retired. So he's, what am I going to do now? My kids don't want it. So he's having to completely build another succession plan. And it's very interesting to see it in action. And we see this all the time. It's never what you think it's going to be. It never just, I built my business, I built it up, I sold it off because it was worth millions of dollars, and I've bought a yacht, and that's how it works. It doesn't work that way.
Yeah, no, that's the movies from the 80s, right?
It'd be great if it did, but it doesn't work that way. And so we got to come up with a plan that works in all scenarios. If you can't sell it, what happens? If you can't do it, what happens? If you can sell it, what happens? So we want all the scenarios. We want to look at every option. What if nobody wants your ugly baby? We call them ugly babies. What if nobody wants your ugly baby?
Because the last thing you want to do is walk away from this assets that generating profit and just walk away, and that would be silly.
Maybe you have $500,000 income, you sell your company, and you found out that now I invest it, and I can only do the safe withdrawal rate of about 4%. Maybe that 4% is only $100,000. So you took a $400,000 lifestyle cut. Can you retire on that? Maybe not. Yeah. We need to know. We need to know whether, hey, I need to do something else, right? I need to get this thing where it runs itself, and maybe selling it's the wrong idea. Maybe hiring someone to run it for you makes more sense. But we look at everything. You have to see it all.
Yet still financially fragile.
Yeah, all of them are. Great example, talk about passing your company to Junior. We've seen scenarios where Junior has a criminal record, or Junior's got some bad credit. You have some bank loans, and now the bankers, I'm not loaning him money. Oh, yeah. So what do you do now? So now we got to talk about how do we structure this corporation where down the road we can have corporate credit and everything's in the company name versus your personal name. And now it makes it a little easier to transfer that potentially to the next era of the business. You got to think about all those things. They all come into play. Credit's a big one. How do you protect that credit? And your partner files bankruptcy. Here's another example of now you're responsible for all the credit now because he can't get credit anymore, he or she. So I think that's a big deal, is now who's taking all the responsibility financially when the other partner has bad credit.
It's bankruptcy, it's divorce, it's death.
Could be
All three, inheritance to the wrong person who has issues, and it costs an acceleration essentially on a loan because they can't underwrite it. They're like, look, this guy doesn't,
Terrible felonies.
Yeah.
Somebody's a felony, all of a sudden we're going to do a deferred comp plan, and maybe there's some life insurance involved, and somebody's a felony and they can't get life insurance. So now my partner did something and got a felony, and now it's affecting the company. Got to look at all of it. Got to look at every scenario and say, what if, and then what can we do to protect it in good times, bad. It has to work, we call it, has to work in 3 different ways. Has to work today, has to work tomorrow, has to work when you want to sell it or retire. And if it doesn't work in all 3, it's probably not the right idea. So we need to come up with better ideas.
Interesting. So note of debt. Do you see debt as a strategic weapon or a slow poison?
With business owners, we're seeing, especially small business, don't have a lot of debt. If they do is credit card debt, they don't have a lot of physical debt because they found out if I go to the bank, I got to put up collateral, and I'll just use my collateral, and then I'll use my cash and just pay cash for stuff. So we see a lot of cash poor businesses that are worth a lot of money. Saw a nut and bolt distributor company, family owned, almost 100-year-old company, had $10 million in inventory paid for. Just over time, they've been paying cash. It is stacked up. These guys were bringing home $250,000 a year. Probably not a good strategy to have all your money tied up in inventory.
Yeah.
One big order that doesn't pay you, and now you're not making any income and you don't have access to capital. Got to look at everything. But we see that a lot. We see a lot of inventory piling up with people paying cash for it.
So I guess in that same vein, you recommend having, if not reserves, some line of credit to draw on?
Line of credit maybe or a better way to buy that inventory over time with a line of credit versus tying all your capital up into assets that aren't making you any money at all. When I sell it, I make money. You're going to make money if it was financed or not financed. You're still going to make money, but don't you want to see what that looks like? Let's look at it in every kind of scenario. Maybe you're the personal loan in the company, the money versus borrowing from the bank. Maybe that's how you establish your credit. Maybe you're the personal bank. Lots of ways to look at it, but you got to see the whole picture. But we do see a lot of inventory. I think that's the big one, inventory piling up.
Interesting.
Yeah, we see a lot, especially in the oil field industry. They buy drill pipe and drill stem and use it on one job, then they keep it, and then all of a sudden they have to use it. The only one that we see that really doesn't do it over time, and even they do it, auto industries even do it. As a car sits on a lot, they have what's called a curtailment. So you ever gone on a lot and they have 5 white trucks and one of them's $15,000 off, and it's just like the other ones that are only $3,000 off? It's set there a long time and they have to pay these curtailments. So they paid it off or paid the balance down really low and they want to move it.
You just want to get it off
to
the
get
lot.
their capital back. So there's strategies to protect against that. And we see it a lot in car dealerships. You'll see a lot of inventory, especially when slow times hit, that inventory starts piling up and they have those curtailments they got to pay. So a lot of dead capital sitting in those vehicles until they sell it.
So it's almost like your oil field example or your nut and bolt hardware example. They should adopt that concept. And it's hard to track a nut and bolt or a pipe. But
Sure, or a box of them, right?
Yeah, right. Yeah. And so the idea would be, hey, at a certain point,
Liquid capital is more valuable.
if you could deploy it. What do you think is the biggest myth about selling a business, exiting?
I think, what is the stat? 90% never sell.
Yeah.
And then of that 90%, very few ever get what they want. So you're not going to get your asking price, and you're probably not going to be able to sell your business. Maybe, but the odds are saying you're not going to be able to sell your business. And then the people that do sell it, I think it's less than 10% get what they want for it.
And do you think that's because for the last 10 or 15 years, when people started the business, they didn't have that exit in mind?
They didn't. Maybe they're leasing a building where they could have bought a building and built another asset that helps them sell. Maybe they have tons of employees that maybe they don't need these employees. I don't know. I think, and then you look at the gap. What's the profit margins that you're looking at? Are they really small? Are they really big? And you may be doing 30, 40, 50 million a year, but you have real small margins. So now if somebody buys your business, they got to figure out how to cut those margins to be profitable or add more in revenue. Sometimes if I was going into the roofing business, it might be easier to start my own with $1 million than it would be to go pay $20 million for one that's already in existence. It might be financially better too. I think the smaller businesses have a better chance of selling than some of these big ones, I think, before they hit their plateaus. They're still on the growth.
Because there's upside, there's growth.
Still got that upside. Interesting, but yeah, selling businesses is not as easy as you think. Selling part of it to private equity might be easier than selling the whole thing off.
Yeah, it also depends on where you are in the cycle. And there's $4 trillion on private equity's balance sheet right now, and they're buying car washes because they don't know what to do with it.
That's a good place to put it, I think. From what I hear, it's a good place. I'm doing the math one day, and I'm like, okay, $25 a car. How many cars go through this thing a day? And I'm like, I still don't see how they're making money. But evidently, there's 1,000 cars a day going through these things.
And what we don't see is the ones who get the subscriptions.
Oh, yeah.
So
they're not even
going
coming
there
through.
maybe once a
That's
month.
the ones, that's the ones you don't
they make a
see.
killing on. So would you say that if your exit plan started 5 years before retirement. Is that too late?
That's pretty good.
Okay.
Yeah, I think 5 years, you have plenty of time. I would start sooner if I could, but I think 5-year plan, like I said, if you have what works today also could help you at your exit, even if it's 20 years from today. If it works today, tomorrow, and at exit. So today's the best time to start today, because you don't know when 5 years is.
That's true. You could
I may
think I'm
think-
going to sell in 5 years, but it could take you 7.
It could take longer, or somebody may come
Make it
along tomorrow.
sooner.
Come along tomorrow, make you the right number. And so people, like I didn't know my business was worth this, but maybe the business isn't, but the property's worth a lot of money.
But it's all the more reason to do the annual assessment you were speaking
Every
about
year.
earlier. If you don't know the number, you're scrambling to figure it out. How can you negotiate a deal? So give me 3 months to figure it out. In that meantime, they could go somewhere else.
Buy another business.
Lose the deal. The deal that may not come by for another 3 years.
People that are buying businesses are looking, and if you don't answer, they're going to go somewhere else, whether it's a snow cone stand or a lumber yard. It's all the same
They're
thing.
ready to deploy the capital, get it in your bank account. So you deal with a lot of business advisors. You've been around the block, seen a lot. Let's talk about the dark side of advisory. What is some of the bad advice?
Not to pick on anyone in particular, I can give several examples, but I think people are very siloed in what they do. Somebody may be really good at 401k plans, and they come in and they're going to sell you a 401k plan. But was that what your company really needed? They don't look at the whole picture. And so I think it's not that they're giving horrible advice or even bad advice. It may be the best 401k plan that you could ever have, but for the business owner, it might not have been what the business owner needed. The business owner might have been needing more tax deductions than $20,000 a year. So maybe they're needing a couple $100,000 and there's a better strategy.
So it really comes down to consider the source, what lens they're looking through.
Sure.
If I have clients who come to me, they're like, we're doing a business divorce and I'm going to sue them if they don't do this. And I'm like, can you help me, or do you need to hire a litigator? I'm like, if you hire a litigator, I promise you're going to be suing them.
Sure.
Because that's what's going to happen.
Yeah.
And so it's consider the source and their angle of attack is what I'm understanding.
Sure.
Yeah. Okay.
It's all siloed. Everybody says, I need a tax strategy. And they go out and they find a tax strategy. Okay, now I need property and casualty insurance. And they're going to go get property and casualty insurance. And then tomorrow I got to do employee benefits. I'm going to go do that. And tomorrow I need a bank loan. But what if all of it works together? What if all of it could say, hey, look, if I raise my deductibles on my property and casualty insurance to $10,000, it's a lot of risk, right? What if it lowers my premiums by $150,000? And now I have capital that now I can buy my inventory with instead of maybe a bank loan, or maybe I can set up that line of credit I was talking about, or take care of a buy-sell agreement in part of my exit strategy. And so what if that $1 can do a multitude of things?
If you look at what that capital can do over a year or 3 years or 5 years and the position you're in, even if you have one claim and you have to pay that higher deductible, you still come out
Still gonna win.
on top.
Yeah.
So it's, again, a holistic analysis. So Boss Financial Group is looking at things from the life side, the P&C side, property and casualty. And are there other angles?
The
other
retirement
lenses?
planning, so that's going to count your exit. If you sold your business, what does that look like? Where are we going to put the money? How much is that going to create you in income? What can we do today? The buy-sell agreements, key man, deferred comp, your personal retirement strategy. What are you doing? Is a 401k the right plan for you? Should be you to be doing a SEP? Should be doing a cash balance plan, which could allow somebody to put a lot more money into a retirement plan, especially if they're a small business. You get some really big tax deductions. Are captive insurance companies the right thing for your business? Maybe not. Let's look at the pros and cons. Are you going to get audited if you do it? That could be a con, right? We don't want to open an audit up. So all the things, you have to look at all the things, and you have to surround yourself. And what we do here is we surround ourselves with experts that do the things we can't do. So I surround myself with people that, we have an attorney we work with very closely that was with a big insurance company for 10 years on the inside. So he understands what we're doing on buy-sell agreements and corporate structure. He's really good at that stuff. I can't do that. We talk about it a little bit, but I don't want my divorce attorney doing it either. I want
You're a real estate attorney or a tax attorney or bankruptcy attorney.
Same thing if I was buying real estate, I would want my real estate attorney to help buy that, purchase that building. So we surround ourselves with experts and bring them in on the case, but we all work together.
And I think you said you have a couple dozen people now.
Yeah, so we have somebody that does everything. We have people that help people find lines of credit. That's their only job, is to help find business, because maybe the bank's not loaning money. Right now they are, but we've seen times where they don't loan money.
It's the banks are,
And then you
they'll
have to-
loan money when you don't need it.
When you've got plenty,
So taking back and looking from putting your founder and entrepreneur hat on, you have this advisory firm. How do you scale?
education. We got to educate people to do what we're doing. We got to teach more and more people to how to sit into my seat and surround themselves with other people that do the things they don't do. We call it the 80-20 rule, right? We've heard this a million times. You can only do 80%. Somebody's got to do 20. So you got to bring those people in, and they have to do 80, and you have to do 20 of what it is they're doing to really round out the model. And we have a whole book. Our Playbook really talks about that a lot in the Playbook. How do you surround yourself with a team of people? When you climb Mount Everest, you're not going by yourself. You're going with a team of people to get you to Mount Everest. There's people that leave the day before just to take oxygen and stash it on the mountain so that you can climb up and have oxygen.
That's a great analogy.
Yeah.
I love that. That's so true. Yeah, it takes a team to do anything leverage.
A whole
It's
team of
leverage. It
people
comes
to do the things that I can't do so I can go faster. So surrounding yourself with people that do the things that you can't do. So as a business owner, surround yourself with a firm like us to do the things that you're not going to be an expert at. But our expert will educate you on why you're doing it. This is why we're going to make this decision. So we want you to know the why. Why did I do this? I don't know. My guy told me to do it. Here's why we did it. We know why we did it. And we know what the outcome could look like. How's this going to affect me in retirement?
That's a beautiful story and so applicable to any service provider.
Anything.
Do you want to take a decade to do this,
Yeah.
or do you want to build a team that can get it done?
Think about the oil field industry. They have people that their only job is called a downhole guy. Anything down that hole is his job. Anything above the hole, he doesn't do it. There's somebody else that manages that part. It's interesting. If you want to get your diesel pickup worked on, you don't take it. You want to take it to a diesel mechanic. You go into the tire store and say, give me the best tires. And they come out with some NASCAR stuff and put it on your truck. It's not going to work. We got to make sure everything works together, but we also have to have specialists to make sure we're getting the right thing in those areas.
It's the concept of niching down too, just focusing, and you'll make so much more. You try to sell to everybody and you'll make X, but you niche down and you make X exponentially.
So if we're going to give ourselves the best chance for success, it's the only way we're going to do it. If you want your business to be successful, you're going to have to surround yourself with people to do the things you can't do. You're going to have to in your business and running your business. I think there's two pieces, right? I'm not going to help you be a plumber, but we can help you with the rest of this stuff.
So you referenced the $1 Million Playbook. How does someone go about getting a copy of that?
I actually have it on a flipping book, so if somebody shoots me an email, I'll send them a copy of the digital version.
Okay. What is your email?
Brent at bossfinancialgrp.com. Catch me there.
And that's the $1 Million Playbook. And
Match up on LinkedIn. I put a lot of
LinkedIn.
content on
Yeah, I'll
LinkedIn
put
about
your
this
link on
stuff.
there. Yeah.
And we have a YouTube channel, Boss Financial Group, where we go through a scenario with a client on YouTube. And there's 8 videos on there. You can see what we do in the process that we go through. It's
so
pretty
LinkedIn, YouTube, and then just coming back full circle to what you're doing now with Boss Financial Group. We're servicing not just Dallas, not just Texas. We're serving the
All over the
U.S.,
country, yep.
right? And it's industry agnostic.
industry agnostic. It is weird because we fall into niche markets. We'll have, right now, what's the one that we're working with now? Baseball field construction.
Really? That's a thing.
All of a sudden, and it's a big deal. These little league baseball fields are money-making machines. And we fell into, now we have 4 or 5 people that are in the baseball industry. But it goes in cycles. It's weird. Healthcare companies were big for a while. Nonprofits, we do a lot with nonprofits. But and then now it's, I think oil fields are the next trend. And then they'll disappear and we'll have another niche market. So it's really weird how it moves around.
There's different cycles.
Yeah.
I wouldn't have called the baseball fields. I would have thought pickleball.
I know, right?
Maybe pickleball.
I know. I see that trend everywhere. They're buying old grocery stores and turning them into pickleball.
Yeah.
I
Doing it indoor.
And
Yeah,
indoor.
you're
I
right.
played about 7 matches total. And I've won every match, so I quit. I'm undefeated.
You got to stop playing 8-year-olds.
I know, right? I'm undefeated at pickleball right now, and we'll keep it that way. I'm not playing any more matches. I'm done.
I'm impressed.
Yeah.
If someone comes to you, what's the onboarding process? How does the fee structure just generally work? Like, how do you operate?
Okay, a couple of different ways. The onboarding process is real easy. We have a digital form. We send it to you. You can upload copies of documents, operating agreements, buy-sell agreements, your insurance policies, your retirement, any documents. We upload it all into the system, and it's going to pre-populate our Financial Foursquare for us. Makes it super simple. The business valuation piece, we do not charge for that. A couple different reasons is we want the information. So if we do it for you, we're going to get all the information that we're needing as well. That can be as much as $10,000 to $30,000. That can be a charge. So that's why when we do it every year, we have an unbelievable software program that we use.
And that's a free service, the valuation.
We do it as a free service if you go through the process. So we don't just do them to hand them out, but if they go through the whole process.
It's a free add-on.
And then we make money on commissions like everybody else. Every product, everything that's ever bought has a commission associated with it. You buy glass, somebody made a commission on selling that glass. If you buy a computer, somebody made commission somewhere. Everything, every product, every insurance product, every investment tool, every investment product, all has commissions, and that's where we
Get paid. So if someone comes to you, a company comes to you, they onboard, they go through this process, they get the valuation, obviously, and that's done every year. Only fees, or is there like a monthly fee? Is there an onboarding fee? Okay, so the fees are incurred when they buy these
if they
products.
decide they want to work with.
Right.
So they don't have to work with us if they don't. We want them to. We want to
great
earn their
model.
business.
Yeah.
Hey, we're going to give you all this stuff, and we believe in what we're doing, and you're going to see the difference, and you're going to want to do what we recommend.
Is that how your other firm did it, or is this something, because I don't think I've seen that. Usually there's a,
They charge a planning fee.
yes.
Unless commissions were higher than the planning fee.
Wow.
And then wipe out the planning fee.
Yeah.
So you're never going to charge a planning fee basically because the commissions are probably going to be more than the 10 grand planning fee that you charged. So it's a marketing thing that we do just to stay busy. And we are busy people. Clients are lining up to go through the process. So it's a good thing. A lot of CPA firms we're working with now, because we give a deliverable of a 180-page document, could be bigger, that we hand the client at the end and they can touch it. Everything is in this book, from the business valuation to the property and casualty valuation to the employee benefits, retirement plans, exit strategies, what you're doing now, what we recommend you do. All of it's in this book, and we give that to the client.
Yeah, I think I saw on your website that the valuation report alone could be potentially 100 pages.
And we do the certified ones. If they need a SBA loan, we can do those as well. If somebody wants it certified and signed off on, they can actually go get an SBA loan with it. So it's not a crappy business valuation. It's the real deal.
It's actionable and it's utility. And just last question on Boss Financial Group. If someone wants to go on board, they just go to your website, which is
bossfinancialgrp.com.
Okay,
Well,
wonderful.
Find me on LinkedIn. We're wide on LinkedIn. I got thousands and thousands of articles that we've written over the years.
That's how I found you. I started seeing your stuff, and I clicked on one of them. I was like, oh, this is insightful. And then obviously you were in my algorithm, so you kept coming up more. And I was like, oh, this is
I'm looking
what he's
working with
talking
you.
about.
We're looking forward to figuring out how to work together now going forward.
No, I love that. Thank you. Thank you. This was wonderful, Brent.
Thank you so much.
I know you're super, super busy. You got this beautiful office here in Dallas, and you and your wife are busy bees.
Yeah.
So we appreciate you giving
Thank you so
some
much.
time. Thank you very much.
Yeah, great.